FTSE faces another gloomy day as Asian stocks plunge. Seng sees biggest drop. Since 2008, global markets are bracing for another turbulent week after Asian stocks took a heavy beating, with the Hang Seng Index suffering its worst plunge since the financial crisis of 2008, following China's retaliation to Donald Trump's tariffs. Last week, the US president's sweeping tariffs, targeting nearly every nation, sent shockwaves through global equities, sparking a major market collapse. Hopes for a recovery at the start of the week quickly evaporated after Hong Kong's Hang Seng Index plummeted by 12% on Monday, marking its largest single-day drop since the 2008 financial meltdown. Japan's Nikkei 225 also took a substantial hit, falling nearly 8%, while the Asian Dow plunged by 11.7%. This was a continuation of the dramatic market sell-off witnessed last week, which saw over 4.9 trillion, 3.8 trillion in global equity value erased, following President Trump's Liberation Day speech that rattled international markets. According to AJ Bell's analysis, in Europe, the FTSE 100 opened 3% lower on Monday, but quickly dropped well below the 5% mark, with the FTSE 250 following a similar downward trajectory, while the pound edged up slightly against the dollar, rising by a mere 0.25% to 1,299.25. It did little to counter the broader market anxiety. The biggest casualties in the FTSE 100 were commodities and mining giant Glencore, which saw its shares drop by 13% right after opening. Within minutes, all 100 companies on the London Stock Exchange's main index were down by at least 2%. RSM's chief economist, Joe Brusuelas, warned that the worst may be yet to come, especially if the European Union mirrors China's actions and imposes its own retaliatory tariffs on the US. I'm telling you right now, the market hasn't priced that in yet, Brusuelas said in an interview with Yahoo Finance. People are thinking this is just a repeat of 2018, but there's far more damage in store if this escalation continues. Brusuelas also suggested that U.S. Treasury Secretary Steven Mnuchin must take immediate steps to calm the markets, following the Trump administration's unveiling of the simplistic tariff formula that has added to market uncertainty. As the global financial turmoil continues, all eyes will remain on the developing trade war and whether further retaliation from the EU or other nations will deepen the market crisis.